Good morning, traders. It is 8:02 a.m. Chicago time on Thursday, the 15th of September, 2022. This is episode number 2315. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, what are the key drivers? Not too much news flow overnight, really. The market's in a mixed to negative to risk-off posture. Crude is coming off. Crude is down 1.62%. The main news right now is really no news. There's some underlying macro type of developments going on. There's a dollar shortage. There are movements by the Chinese government to try to stem this potential crash in their real estate market, and overall, just an interesting kind of environment to be in. But not too much going on. The big headline that came out at 5:05 a.m. this morning is the railroad strike, potential national railroad strike in the U.S., which directly impacts supply chains, natural gas movement, and consumption, and so on and so forth. This work strike for the U.S. railroad system has been averted somewhat. The parties agreed to a cooling off period as part of a deal, as standing part of ratification process in case vote fails in order to avert any shutdown, according to Reuters. So that's the big piece this morning. Other than that, really, the markets are watching the movement of the dollar. Dollar's just all over the place. Interest rates, and of course, so we've got triple witching tomorrow, expiration tomorrow, and then we have the Fed next week, right? So that's where that stands. We already had retail sales out of the U.S. The retail sales came in pretty strong, 0.3% versus 0.1%. Nothing too surprising there. Nothing really market moving at the moment. Philadelphia Fed manufacturing came in much worse at 9.9% negative versus +4. Initial claims came in better, 213,000 versus 225,000 expected. Import prices came in at -1%, expected at -1.1%, so relatively in line. Export prices came in at -1.6% versus -0.4%. And then we have industrial production in about 10 minutes. Business inventories at 10, expecting 0.7. And then this evening, we're looking for housing prices out of China. And then the big number today for China is industrial production at 10 p.m., expecting 3.9%. Okay, so that's where we stand. The S&P completely balanced at the moment. The inventory is at 0 to -1%. Inventory is completely balanced. In other words, the volume above and below yesterday's settlement is about even. The market's currently trading, and I'll pull up a chart in a minute, currently trading at the full session VWAP mid. The point of control is has shifted up slightly against yesterday's overnight session to 39.71 1/4. The range 28.5 is well within the normal range. Okay, so that's where we stand. Things are just kind of in a holding pattern since the CPI is where we're at, and we talked about this quite a bit yesterday. That it's not as bad as you might think. So here's what was expected in yesterday's discussion. We were opening in this sandwich of the overnight point of control, the full session VWAP and full session mid, and the expectation is that we would break out the 75 right here, 75, consolidate it to 75, and then push towards the 39.80. That was the key play. If it's not able to do that, it would likely test the prior settlement. I was looking for a test of prior settlement. Always look for either a bounce or consolidation and a continuation on settlement. We actually had the run up and we had the settlement test as well. We were kind of all over the place yesterday. Here's what the S&P looked like. Let's start with the active chart. Whoa, what's going on here? What happened to my chart? There we go. Not sure why it shifted, but here we are. Let's go back to TPO chart. So this is the last time we were down here. We formed this kind of massive balance that we rallied off of. Then we pushed last Friday with a gap up. Then we had CPI. CPI dropped us. We opened down here in the 40 area, tried to push up and ended up closing down. We closed right against the point of control of this entire area from the end of September, beginning of end of August, beginning of September, where I had talked about the just a tremendous amount of support expected here. We pushed into it. We closed right on top of the point of control. And then yesterday, remember we talked about Tuesday being an impulsive day. It was like a 4 or 5 sigma close to close day, very, very impulsive day. And we talked about the fact that despite the process that it went through in discovering down, we actually just moved from bigger balance to short-term balance, and I'm not expecting this thing to just keep running. I'm expecting it to take out the low, because that's what we often do. And then I expect it to rotate in here because we are responsive to the lower balance and initiative from the upper balance. So I did not expect anything crazy yesterday. I expected it to balance out, test the prior settlement, potentially push lower. I expected the low to be taken out, but overall expected it to kind of struggle in this 39.75 area that I talked about. So anywhere between 39.50, 39.75, which is exactly where we're stuck in the overnight session. So let's look at what it's done here. Man, what is going on with this chart? Yikes. I don't know. Sometimes my computer does something that screws up these levels. Let's look at this on IRT. All right. So, again, what you're looking at here, I don't know if this is clear to you or not. What you're looking at here is this is CPI RTH. This is the overnight session yesterday. This is yesterday's day session in the blue profile. This is the current overnight session. And you could see that we had that push into settlement. We pushed higher. We went to the 75 early on right here. So we pushed to settlement, rotated back up, and pushed to 75. So we hit these two targets. Not easy to trade. I found it was difficult to find a spot. It was relatively sideways and noisy yesterday. Let me enlarge this. And then what do we have? We have basically just a massive zipper forming for the day. Complete bounce. We sold off into the close. We ended up pushing the IB high. So the IB low is taken. The IB high was taken. And then we ended up pushing to the other extreme, to the IB low again, and then getting back into the middle. This here is balance. This is about as balanced as it gets. I mean, it's really trying to find interest, and it keeps, every time it sticks its head up, it gets pushed down. Every time it pushes lower, it gets pushed back up. It's really an outside-in trade. And then we come into this morning, and we are trapped in the 75 to 50 range, and that's where we are. We spent most of the session up in here, then we extended down on that rail news to fill in the bottom, but at the end of the day, we're still in balance. So coming into today, we have, what is the summary of what I'm saying? Coming into today, we have basically a market that has shifted from high balance to the lowest balance to support. It has taken out and extended the large sell-off we saw on Tuesday on the CPI release. It has extended that, got the job done. We saw buyers come in and defend. You see this? We took out the low of the CPI day. This is an excess low. The buyers came in to defend. This is really important information. It tells us that we are very, very likely to test the other side or to remain in balance, that the job to the downside is done. So we don't want to be thinking bearish or short at that point. Later on in the session, we had this big impulse down, sure, but at this point, all of the information we had confirmed what I had talked about and explained in painful detail yesterday, that we are likely to be in balance here. So we ended up being in balance for most of the session. Not much to say, not much to offer. A couple of very, very limited trades yesterday. And then it ends up trying to push on the close to the downside, and then that's refuted as well. So we make a lower low, and immediately we see buyers bring it back to where? To the point of control, to the developing point of control for the session. So overall, we have clear balance, 39.54 being the key price. We open up and more balance. We break below settlement and the point of control, and we test it from below. So here's your settlement and point of control right here. And that's our line in the sand this morning. So coming into this morning, we know we're in a pretty big balance zone in the support side, on the support side of the current auction. We know that it is rollover week. The roll is pretty much done this morning. I'll post a chart on that on my Twitter and also on the Convergent Trading Maven channel when I'm done here. But we know that we have tested and balance has held below. We have not had massive selling coming in. It really looks like the CPI was pretty much an overreaction at this point. And it's really stabilizing. It's holding balance. So we have balance. We're coming into the roll, and then tomorrow's triple witching. So in this environment, what we have is a very difficult market to read intraday, in my opinion. We're likely to see a lot of noise. We're not likely to see good price discovery is what I'm expecting today. So it's going to be you have to be very, very patient, and you have to think like someone who is really hunting for a prey that is very, very sensitive. You have to sit still. You don't want to move. You want it to come to you. You want to take very few shots in the current action. You want to save your bullets for when this mess is over. We have the Fed next week on the 20th and 21st, and the market's likely to reprice at that point. The market's pricing in, last I looked, about an 88 to 90% probability of a 75 basis point hike. That's what's being priced into the Fed funds futures currently. Once that gets done, the market can resume its normal auction. So for my caution to you today, if you are trading my money in prop today, I would say cut your size, keep yourself busy, but not busy trading. Like just slow down and let the market kind of come to you. It has to be really obvious. For me to take a trade, it has to be a really obvious imbalance in pricing. Otherwise, I'm just not interested in sticking my neck out and investing in the current environment. Okay. So with that being said, let's take a look at what's expected for today. So this is where we are. This morning, okay, so what are the expectations here this morning? You probably can already guess what I'm going to draw on here. We are right underneath this sandwich of stuff. We have the prior settle, prior point of control, full session VWAP, full session mid, all sandwiched in the same area. We are trading below it. The LIS is in that area. I'm expecting a test of prior settle. The market is expected to be an open auction in range. I'm expecting it to push lower, take out the overnight low at 48.5, consolidate here, and then finally find buyers. Expect it to reverse, come back to the open, and ultimately tag the prior settle, and then start moving towards that 75 again to sit somewhere in the middle. We're going to diddle in the middle today, expecting a lower high, higher low, and nothing really significant going on today. The secondary is actually pretty bearish. The secondary is we open, we move towards that prior settlement, the prior point of control, VWAP mid, and we're just not able to hold these prices. We finally impulse down, and what we'll see, what we're likely to see here is a continuation of the retest based on the CPI. So a continuation of the CPI price discovery, and in this I'm expecting it to move towards that 39.05 below. 39.05 is key below. It's the low of this entire segment, but I'm not expecting it to push hard. Remember, it is expiration. There's going to be delta hedging. Prices are going to likely to be pegged because of that, because of the option action. So I'm not expecting too much range. We generally don't get good range on expiration. We got a lot of volume and a market that's a little bit trapped. So those are the two main scenarios. We're opening in range right underneath yesterday's value. And so I'm expecting a test of value at some point today. And that's the main trade for today, is that push back to the prior point of control and settlement area. That is what I'm looking for. That's potentially the only trade I see right at the open. So a pushback, and how does it treat the prior point of control and prior settlement, along with mid and full session VWAP in that area. And if it's not able to push through, that's a short. Come back to target the open, target the overnight low if it hasn't been taken, and that's pretty much the trade of the day. Okay, I know it's a lot to digest, but hopefully you're following along and learning something every day. My approach, by the way, has been the same for 15 years. I haven't had to change my RSI, CCI, MACD settings. I don't use any of that. It's the same. I'm just paying attention to the auction, waiting, making a plan, waiting for it to commit. Once it commits, I commit, and then I let the trade do what it's got to do. Lots of stops, lots of winners, and in the balance, I'm looking for the winners to be a lot bigger than the stop outs. And that's basically a career. Good luck. Take care.